Good afternoon, everybody. Welcome to Friday's Zoom session with Gary. We will be starting in just a little bit here. We're having some people get admitted, and then we will open today's session with Gary giving a brief intro, and then we will open it up for questions and comments afterwards. All right, Gary, you ready? We look like we got a good crowd already.
Okay. I got a email from Brian. Brian is a guy I've gotten to know in Nashville, and he's a football coach at a high school and teacher. And I've in fact done some videos for his classes. And he sent me a video, and I think it's within the last 24 hours. And the title of it was that Tesla may go bankrupt. And I, of course, felt I needed to watch it. And what it was, I think it was Bloomberg's. It looked like some raw video of Elon sitting at a table with some of his engineers, and he was going over the fact that they're burning money. He made the fact that the statement that, and I don't know which plant he was in at the time, but he said this plant is a furnace burning money. And one of his engineers said, "You mean like a dumpster fire?" He said, no, much, much bigger than a dumpster fire. We're burning money. And he said, and then with the shutdown in Shanghai, we're burning money over there too. And he basically said, unless we can turn this around, we'll go bankrupt. And I think he was being a little overreactionary, but I think the message to be delivered there or taken away there is that we're going to see some terrible earnings come out of manufacturers and virtually everybody in this second quarter report, most of which are going to start coming probably the second week in July through the end of July. I just did a video about the bear market, and I made the proposal that I'm going to sell 1/3 of my Amazon, my Google, and then I'm also looking at NVIDIA, Apple, and Microsoft in the anticipation that we are in a bear market rally, and that the worst of this bear market has not hit us yet because they haven't shared the dismal results that they're having in second quarter earnings. That was also confirmed. I was talking to someone in the corporate world, and they were saying, yes, we are cutting down all of our air travel. We're laying off, and Elon has laid off 10% of his executive force while he's continuing to hire on the line. So they're trying to cut expenses. And I'm not saying this is the end of Tesla or it's the end of anything, but I don't think we have totally factored in the impact of a broken supply chain and the effect it's going to have on corporations in their second quarter earnings. And we need to make note of that and work it in our favor. And that's why I'm saying I have substantial holdings in Amazon, Google, NVIDIA, Apple, and Microsoft. So why not set a target? And that's what I've done with each one of them. I used Wes's Fibonacci, what he's taught me about the Fibonacci retracement. And for most times that's used from a low point to a high point. I just turned it around and used it from a high point to a low point and said that if we're in a bear market rally, then there's a potential that these stocks could rally to that 50% mark, or I don't even need for it to be that high. And then when their earnings reports comes down, they're gonna do a slam dunk and hit the bottom. So what I've done is said that Amazon, I have a target price of $135, Google $2,354, NVIDIA 225, Apple 154, and Microsoft 195. And my objective again is sell there, wait for the earnings and buy at the bottom, and reduce my cost basis, buy back the same number of shares I sold, and end up with more money, more cash that I could use then to buy other stocks that are depressed, particularly in the genome sequencing, what seems to be getting some play now. The other thing I think we need to understand is the impact of the oil prices. You may not be hurt by the high price of gasoline, but you've got to know that there's a major part of our population that is, and as a result, of the doubling in the prices of gasoline, they're not going to buy discretionary items on Amazon. They're not searching on Google, so Google isn't selling as much advertising. And again, this is going to affect the earnings of these people, and I don't think it's been factored in to the amount that it's going to impact. My other, I kind of got I went back and I did a search, and I encourage you all to do this. Do a search on Exxon's earnings and see what their quarterly earnings were over the last 5 years. You're going to find that in second quarter of 2020, their earnings were 1 cent. 1 cent per share. Their earnings last quarter were $2.57 a share. Okay. They're certainly making more than they did in the past. And I guess my issue on this is they aren't admitting it. They're basically saying we aren't making any more money. The price of oil has gone up for us. Well, yeah, but you're the guy who drills it. You're the guy who takes it out of the ground. Who are you paying this higher price to? And so I think what even upset me more was I watched David Faber's special. I believe it was on Wednesday night, an hour-long documentary in which he did an hour-long look at Exxon Oil. And they put him on a hot helicopter and flew him all over. And they showed them the magnificent operation that they had. And they took him to another plant where I learned that Exxon has a plastics factory, and they make the plastic bag that holds my Kellogg's cornflakes inside of my my cornflake box, and they make the plastic that is in all my Ziploc bags, and I didn't know they did that. But here was a company that is costing me doubling the price of what I pay for my gasoline, and they're doing a promo piece. I went to an article that CNBC wrote about the piece, and I found a lady's name that and her email address, and I wrote her and I said, I'd like to interview you and talk to you and learn more about David's piece on Exxon, because I want to know who paid for it. I want to know who paid for it. It was an hour-long piece. I don't know what it costs to make an hour-long documentary, but I know what it costs to make movies. It's $50 million. Who paid for that? I don't think they probably paid $50 million. Did David Faber get paid to pump Exxon oil while I'm pumping my gas at $5 a gallon? Is that right? Is that, and then I watch CNBC, and their talking heads tell me that Exxon isn't gouging us. Well, then who the hell is? Who the hell is? And I don't really have a problem with it, because I know in second quarter of 2000, they had tankers sitting in the in the Gulf that they couldn't unload the oil, and the oil had a negative price tag on it. So I understand that, but don't lie to me. And then I guess the other thing that upset me was that Joe has announced he's going to potentially forgive the gasoline tax, which will save me 18 cents a gallon. Well, who's that costing? Who's the end? Who's the end cost of that 18 cents? Me, because now they don't fix my roads. Now they don't fix my bridges. So who should take that 18 cent off? I think Exxon should. I don't think they need to raise if you look at back in their history, they customarily made somewhere in the neighborhood of $1.50 per share. But now they're making $2.50 per share. And I know why they're doing that, because I guess I saw the interview with their CEO, and I would guess he's 58, 60 years old. He's only got 5 more years. He needs to make his bonus, and he needs to make it now. And we're taking the hit for it. We, the population. I don't like that. I'll do a video on it, and probably won't get a lot of views, but I hope that CNBC calls me and I have an opportunity to talk to them about it. So those are the things on my mind. What I want to emphasize, though, is we're in a bear market rally. It's been 3 days that the stocks have gone up. Google was actually up 4.5% today. I can't, from my knowledge and what I see is happening on YouTube, I don't see that they're making a lot of money. Although I recognize, and someone pointed this out to me, the most difficult kind of channel to own on Google is that of the financial channel. I want you all to, in your leisure time, Google in where you search for videos, Google gardening. You're going to find that there's about 7 gardener YouTubers who get millions of views, millions of views. So if you want to go into the YouTube business, become a gardener. I love this one that had 4 million views, I believe, if I remember. On your tomato plants, grow more tomatoes than leaves. And he had 4 million views in less than a year. I don't know what the payout is per click on gardeners, but it doesn't have to be a lot to make that a gold mine. So those are the, then I have shared with you, some of you I know, that my wife has a tumor in her head. It's a non-malignant tumor. And as a result of it, about 6 years ago, she lost the hearing in her left ear. And so she now wears her hearing aid there. What this transmits sound to this. She woke up Tuesday morning and she was 90% deaf. Yeah. It's hell getting old. We've taken her to the doctor. They found a hair in her ear that was laying on her eardrum. They plucked that hair out and her hearing has come back. We have an appointment next week to go to get an MRI to find out if that tumor has moved or if it has grown. But it's hell getting old. Just be happy with the health you have. And I would encourage you, I make a point to either walk or run 10 miles a week, because you got to keep your body in shape and keep it going. Okay, Kevin, that's what I have to say.
All righty. If anybody has any questions or comments, they can raise their hand or just signal to me and I'll get you up. All right, we've got Benny up first. If you want to go ahead, Benny, unmute yourself. There you go, Benny.
Yeah, thank you. Carrie, a few weeks ago, you talked about investing in Amazon Web Services. I can't find a ticker symbol for that.
No, there is none. It's part of Amazon. That's where Amazon makes 80% of its profits. And let me tell you what Amazon Web Services is. When Amazon first started, they found that they could not handle the traffic that they got from November to January. So they went out in mostly in New Jersey and bought land and built Butler buildings. You know what a Butler building is? Okay. And they built them double the normal size and they put servers in there. And those servers were for the purpose of handling their traffic November through January for Christmas. They learned that then in March, they weren't being used. So they basically created a company called Amazon Web Services, and they created a utility, if you will, that anybody who wanted an app, had an app and needed servers to process their website activity, they could rent it on a by usage basis. And Amazon undercut Microsoft and Google by roughly a factor of 10. And because they basically said, it's just sitting there. We really don't need it. It handles what we need. And they have now grown. Amazon Web Services is the largest processor of data in the world, second behind Microsoft. So that's where 80% of Amazon's profits come from. What also happened in that time frame is we made a transition from keeping our data on our hard drive. Do you remember when you used to have a hard drive? And we all subscribed to putting it into the cloud. What that basically meant was that all our data is now being processed basically by Amazon, Microsoft, Google, and Apple. And that's the growth of our economy in the future. And that's where you now take that data that they've been collecting for roughly 30 years and you apply artificial intelligence to it. And Benny, it knows every place you've been, every place you're going, everything you bought. It knows everything about you. You probably have a GPS that is run by either Google or Amazon in your car. I know for me, I get every month, I get an email from Google that says, here's where you've been, here's where you stopped. And that's That's Amazon Web Services, Google's web services, and I think Microsoft calls theirs Azure. But that's the future of our world, that data.
A minute ago, you listed 5 stocks that you would sell if they reach a target price. Do you have a bottom price on those same stock?
Yeah, I do. I do on Amazon. I think it has a potential to come down to 92. I think Google has a potential to come down to 2,000. I have not done that on because I know those two because I did them for a video. I will figure that out and make sure it won't happen before next week. But I'll make sure I share that with y'all. And again, if you Benny, do you understand the Fibonacci retracement tool?
No.
Okay. Wes does a tremendous job on this. Do you have something like TradingViews, a charting method?
No.
Okay. You should.
Well, my situation has changed recently, so I'll have more time in the future to do stuff like that.
Okay. In essence, what it says is that the history tells us that when you have a huge surge in stock prices, the market will normally retrace itself by 50%. In other words, if a stock goes from $1 to $100, historically it says it will at some point come back to 50. Okay, and that's just a historic data point when it experiences difficult times. Another video that you'll see tomorrow is all about Peter Zion's new book. And I have found a way for you to get a free copy of it. And it's an Audible copy. But this is a book that I got a third of the way through it, and I said to myself, and I see Nick smiling, every high school kid in the world needs to read this book. And I'm only a half a way through it right now, but I've watched a lot of interviews by him and I know what's coming. My God, when he explains to you what's going to happen in China and what's going to happen in this world in the next 5 years, he says China will collapse in 5 years, and he gives you a case, and it's hard to argue his case. The guy has so damn much knowledge in his head that he just spills it out. And as I said, I have found a way to get you a free copy, a digital copy of that book. Download it on your phone, and it's 16 hours of the most information you will ever get about investing and what's going to happen in our world.
And what's the name of that book?
I've ordered it and I don't, so I have to look it up on my phone. It's got a very dismal title. The End of the World is Just the Beginning. And then it says in smaller type, I have to put my glasses on, mapping the collapse of globalization. He tells you, and this really never dawned on me, go back and get an S&P chart that takes you back to, it's S&P, I think, to 1876, and watch that chart, and you're going to see all of a sudden about 1989, the stock market explodes. And that's the beginning of globalization. That was when we decided we would rather have our Nike shoes manufactured in China than here. That's when we decided we would rather have our clothes manufactured in India than here. That's when we decided we would rather have our furniture manufactured in Korea than in South Carolina. And the world exploded. That was globalization. Now, one of the unintended consequences of globalization is the coronavirus, and now monkeypox, and the fact that we are dependent on an adversarial nation for 4% of our energy, that we are dependent on the country that says we will bury you both economically, militarily, and socially by 2040. And we are dependent upon them for our semiconductors, for our iPhones, for our shoes, for our socks, for our TVs. And we just woke up and said, that can't happen. We have to deglobalize. Now, what's going on as a result of that is China will have all this manufacturing and they'll have no buyers because we buy 40% of everything they make. Now, you would say, yes, but they have a growing population, and that population will prosper and buy their goods. Remember the one-child policy, 1975 through 2015? They don't have any babies. It takes 20 years. You may not know this, but it takes 20 years to make a 20-year-old. As you move people off the farm and into the city, in where they don't need those kids to farm the land, and you move them from a house to an apartment of roughly 244 square feet, making babies stops. In China, they have a reproduction rate per woman of 1.2 children. You cannot survive on that. If your buyers go away, if you need Russia to supply you with your oil and gas and your food from Ukraine, you will die in 5 years. That's what I've read so far in this book.
Does he address Russia in that book?
Yes, he does. And Nick will tell you, he in his book written in 2014 told us that Russia would invade Ukraine in 2020. He was 2 years off. He explains that Russia, their number one export is oil. Their number two export is gas. The number three export is vodka, and their number four export is caviar. What are we trying to get rid of? The use of oil and gas to save our world. Russia then says, I've got to change the mix of my country. Russia also says the average life expectancy of a male in our country is 57, female 59. We have rampant HIV, we have rampant alcoholism, and everybody smokes. We're dying from the inside. We must invade Ukraine. And Nick will tell you, right after that comes the Baltic countries. He isn't going to stop there. And the United States has basically said, we're done with this. We're not going to protect you people anymore. We have done it since 1945. And we are now going to de-globalize. We're going to shut down our borders. We're bringing everything back into here, and you people take care of yourself. And we aren't going to stop Russia. And we're going to become a nationalist. The people that are going to make our stuff now live in South America. Colombia has the better education. They can take over, and Mexico can take over from what we can't produce with 3D printing and robotics. We need cheap labor. We'll get it from Mexico and South America. And this is all going to happen in the next 10 years. Read this book.
You say it was 16 hours long?
Yeah. Yeah. I'm only 3 hours into it. So Benny, do what I do. Download it onto your phone, get yourself some earbuds, and go on a 2-mile walk.
Okay.
All righty, Benny, thank you. We got Nicholas here. Nicholas, if you want to unmute yourself, then go ahead.
Nick, that's a new look.
Well, I'm in the vineyard, right off, near Nantucket, or right off the coast of Massachusetts. Can you hear me okay? Because I'm kind of near a roadway, but I do have one of the most beautiful views. I got to show it to you. Hold on one second. Let's see. Okay, there we go.
Oh, wow. That's a vineyard? That looks like a harbor.
It's Martha's Vineyard. It's about 16-mile island right off the coast, kind of close to Nantucket.
That's where the rich people hang out.
You're damn right. That's exactly right. A lot of my wife's Palm Beach crew come up here, either Martha's Vineyard or Nantucket during the summertime. And back in the wintertime, they're in Palm Beach. So
I read an article that says to rent a house there for a month is what it costs to own a house in Des Moines, Iowa, to buy a house in Des Moines, Iowa.
Well, in this hotel, which is right, in the harbor, I'm paying $850, and I got to be honest with you, it's almost like a rooming house. It really is. It's got a bed, I guess you could call it a shower, and that's it. Okay? So,
$850 a night?
What's that?
$850 a night?
Yes, $850 a night.
Have you ever considered Little Palm Island?
That's off the coast of New York somewhere.
No, it's off the coast of the Florida Keys. It's about $2,500 a night.
Well, okay, so I'm really sorry to hear about Nita. As I'm sitting here and the market's not doing well and the war in Ukraine is not going so well, you're always looking, and I deal with personal family tragedy just about every day of the week. It's good to every once in a while to reflect and be grateful for what we do have, not necessarily what we don't have. And, at the end of the day, despite a lot of money that's going out the door for me in the stock market, you got to reflect upon good health. And, good health is really everything, because once you lose your health, then things get really, really, really tricky. That's for sure. So I wish her the best.
Thank you.
I read the Peter Zeihan book, and I got to be honest with you. To me, it's depressing because globalization worked. Okay, I actually rode my bike by Bretton Woods a couple weeks ago. It's in New Hampshire, off of the North Conway, Kancamagus Highway. I rode my bike right by probably where that meeting took place, which was the Mount Washington Hotel. So it's kind of interesting where globalization began right after World War II in Bretton Woods. And it served us so well for the last 60 years. And as Peter Zeihan says, the best year ever in the history of mankind was the year 2019. And it's kind of sad to see that is now in the past, because what we're going to have now, he says, is like the Middle Ages, when we had feudalism and vassals, little kingdoms of 20-mile radiuses, where one kingdom would invade the other just to get the tomatoes, you know? And so now we're going to be breaking up into little parts. We made China through globalization, and now we're going to destroy China through this nationalism that we're going to be having. And, you know, when I think of China, I think of two things. I think of Apple, which represents 8% of the S&P. And they, as Peter Zeihan says, are doubling down on their investment in China. So if China falls, what the hell is going to happen to Apple? And he warns us all, if you want an upgrade on your Apple phone, you better get it now, because in a year or two, you're not going to be able to get it for several years. And I'm just worried that those people who put money into the index funds, if Apple starts to have serious problems, then that might affect the S&P. And then we got Tesla, and we heard about what our beloved CEO said. And I don't know if it's FUD. I don't know if he's telling the truth. But, you know, the number one thing I always was told by my great-great-granddaddy, who told me two things. If you're not cheating, you're not trying. Okay. And of course, our beloved coach from the New England Patriots feels the same way. And look where they are. One, my granddaddy was a multimillionaire, and Bill Belichick is going to be a Hall of Fame coach. But you know, he sold Elon Musk a lot of stock. And, you know, he gave a reason of taxes and, you know, paying his taxes back. But, you know, you never can underestimate what an insider seller does. What did he know when he sold his billions? Okay. And so I'm going to give him the benefit of the doubt and say that he's telling the truth, and that there's going to be a serious slow bleed or maybe fast bleed on Tesla. I mean, I don't know, but I got to take him for his word for it. And now we've got, you know, I'm worried about Amazon. Amazon is building all these warehouses all over the damn place. And there's a couple right around where I live. And unfortunately now, there's going to be a demand for their products is going to decrease significantly. And these warehouses are not going to be filled with shit, especially from China if it collapses. So I see Amazon having a serious problem. Now, Peter Zeihan says a good thing about what Amazon may be doing to these empty warehouses that Amazon is building, and that is bringing in 3D printing to be able to print out a product that's been ordered and then send it out the next day. So they're going to be renting out these empty warehouses, or anticipate to be empty warehouses, to manufacturers. Peter Zeihan says that the United States is in a good position, okay? But for the next 5 years, there's going to be significant inflation. There's no way around it. And what's going to save us is bringing manufacturing back. And so Benny, I know Benny and I've done a lot of 3D investment. You know, whatever happened to Desktop Metal, I don't know, 3D printing. But I'm banking on the fact that the manufacturing is going to come in here, robotics, in the next 5 years. According to Peter Zeihan, is going to kind of save us in bringing manufacturing home and not relying on China. So I'd like to hear your thoughts on that. But before I end, you know, my big worry at the end of the day, Kerry, is this war, because, you know, I'm getting feedback from Ukraine, and it's a Stalingrad. And I don't see Putin, and just like you had said in your opening comment, kind of waving a white flag at all anytime soon. And he's only going to up the ante. And we know how that affects energy prices. We know how it affects the agriculture, food. We know that my daughter, who's in Africa on the Peace Corps, she says that they're running out of the grain that they have there, and they're going to be calling her back very soon. And that this last year's supply of grain is almost at its end.
We lost you.
Couple months.
We lost you, Nick.
All over the world, especially the Middle East, and especially in Africa. And oh, okay, the famine is going to start to hit. Can you hear me?
Yes, I
Hello?
agree. Famine is, and in fact, I just read an article that the number of people who don't have enough to eat has doubled in the last 2 years. I think we lost Nick.
Yeah,
Well,
I
now
think
it looks like we got him back.
he's still cutting in and out. We're gonna have to
Okay.
come back to Nick a little bit later.
And so I don't see.
I think we're gonna have to come back to Nick here in a little bit.
Yeah.
All right.
Stan, if you want to go ahead and unmute yourself,
Can you hear
please.
me okay?
No, we've lost you,
Excuse me.
Nick.
That's okay. Take care.
Thanks.
Go
Hey,
ahead.
guys.
Yep.
So I was gonna give you an update, told you guys what happened
Yeah.
about 6 weeks ago. Had a surprise yesterday. The bank froze her account. And vendors were not getting paid. So when this happens to you guys, be aware, even though there's money in that account, they will freeze it. Found a good use for Facebook's algorithm. I have been watching puppy videos on Facebook Reels. The algorithm must have picked it up. Now all I get is puppy videos,
Puppy.
which is kind of cool.
Okay.
And where the heck, talking about bringing things home, where is the CHIP Act? And why isn't it being pushed through? So that's it. Thanks, guys.
Okay.
Alrighty.
I know what you're talking about, the CHIP Act, that, and I know that, I believe it's Intel that's building a plant, I think one in Ohio and another one in Arizona. And that's going to take, though, 4 years probably to get that done. So, and then, as I said, we have two very important events coming up that are going to affect the market very dramatically. And one of is earnings season, and the other is the midterm election. And I fully expect that the power, the control of the House and Senate will shift, and maybe we can move forward on something. I don't know, but you just can't depend upon it. Okay.
Alrighty, we've got Bob from Ireland. Bob, if you want to talk here, go ahead and unmute yourself.
Hiya guys, great to see you and hear you all. Just one thing, just got my cogs turning there when you mentioned China. Like when you mentioned China, okay, it might have a downturn, but like you're talking like that Chinese downturn is going to be catastrophic and that's the end of it for China. If China has a downturn, China will bounce back. It's a tremendous economy with so many clever people. You look out a hotel, look out into the car park in the hotel in China, you'll see Maseratis and Porsches and all sorts of cars. You won't see Fords and, you know, all the standard cars you see in Ireland when you look over the wall of a hotel. They're really successful people. And if they do have a collapse, call it like 1930s America, they're going to just bounce back. So like a collapse is going to be a good thing for us investors if there's opportunities there, you know. Listen, that was just to get that off my chest. China's coming back. China's always there. They're going to be cheaper mostly as well, you know. So like it's not a pre-written thing. But I raised my hand as well because I was just watching Gabe's calls and puts options video, and it was really, really good, you know. I'm only about halfway through it. I'm going to watch it again from the start, and I'm probably going to watch it probably 2 or 3 times and get out the pen and paper and to try and really understand what Gabe is saying. He really opened my eyes up last week when I was kind of being negative about the market, and he just jumped in and he kind of cut strips off me, but in a good way. He really opened my eyes to how if you believe in a company that you can dollar cost average into it, and and it's the company. I don't know, it's something that Kerry's been pumping so much, but Kerry has other things going on. But Gabe was really just honest about it, and it just made so much perfect sense. Yeah, if a company is good, that is the bottom line of investing. You know,
Right.
is the company being good? I think that's
And
what
does it
I'm
have a
really-
future?
I'm so new. So I told you, Kerry, before. I'm sort of 18 months or whatever into this investing from scratch. You know what I mean? I didn't know what a bull or a bear was when I started. But now I can listen to Gabe's trading options thing and actually be sort of have a half a clue. You know,
Excellent.
in the land of the blind, one eye is king type of thing. You know what I mean?
Okay.
It's just I really want to acknowledge Gabe and for his contribution to that video. It was really good. He's a really great educationalist, and he's kind of saying the same things you are, Kerry, and also other stuff. I don't know. You don't do puts and calls and all that
No.
malarkey, but you do good companies. You know, which is the bottom line of trading. I think that's kind of where I'm going, but I just want to give Gabe the nod. I don't know if he's watching tonight, but I'm going to watch his video about 5 or 10 more times. And I'm sorry I wasn't there. It was late night for me, and I did have a really busy day that day.
Okay.
And I knew that I was not going to watch it live, but it was really, really great. And it just adds to what you've made here, Kerry. There's also the premium channel, Kerry, which I'm going to bow out of. I've been in it and I've been really enjoying it, and I've really got my money's worth. In term, I've got education. That's what I went in for. You know, I did buy a few stocks. One is up and one is down. And I'm moving away, not because I don't want to be there. I'm moving away because I get a lot from Best of Us investors at the $10-ish, whatever that
That's
translates.
fine.
And that's great. I love that. I really get a lot out of that, you know. And I'm not investing a lot of cash at the moment. Like I want to put my investment at the moment, not to bore you, but it's in my property here. That's where I want my money to go right now for the next until it takes to get this done. And I love investing in the stocks. They're new to me, and I'm learning. I am down. A lot of us are down. We're all okay with that because of the companies. Okay, so yeah, I raised my hand because I wanted to just acknowledge Gabe.
I want to say that you aren't the first person that's told me that a lot of people have spoken very highly of what he's done, and I'm glad to hear that.
Yeah,
Thank you for sharing.
Yeah, he's really good. He's a really good educationalist, and I think Drew or Kevin shared a link to his session. It's in is it announcements? I think it might be an announcements on the Patreon, and I'd recommend anyone to go and take a look at what Gabe has to say. And that's what I love. That's why the Patreon. I'm sorry to leave it the diamond Patreon or the platinum Patreon.
Right.
Is because it's been really good listening to those guys talking. They're not always right either in the short term, you know. But maybe they're talking about good, like some of the stuff they're talking about is down today from when they spoke about it. But they're still fantastic company, or some of them are not fantastic, and they also tell you which are not the good companies in their opinion right now.
While you're on that, and while I see that Wes is here, and I think I saw that Mark was here too. Early in July, we're going to have a roundtable discussion with Andrew, Mark, Wes, and I, and we're going to invite you all to come, and we're going to pick a topic, and we're just going to talk about that. And we're going to talk about the four of us. We'll each have a short period, and then we'll take questions and answers, and we're going to try to limit it to an hour. We're trying again every way we can to add value to this community. And however that works out, it's got to be for that you look at it and say, that's something I want to continue to be a part of. But thank you, Bob, for your input. And I see Gabriel Gabriel, if you missed it, Bob just threw a lot of accolades your way. Okay.
That is correct.
Thank
Okay.
you. Thank you.
Alrighty. If we want to go over to the other Bob now, Bob, the owner, if you want to go ahead and unmute yourself. and
That
go
would be
ahead.
in upstate New York.
Yeah, you got it. Just got out of the swimming pool. You know, we don't have minus 20 degrees anymore.
Okay.
We're now at 70 to 80. We're only 3 months behind you. I just got one question. I know that you had negotiated a rate with Seeking Alpha, 50% discount, and I'm a little bit slow, but I've been getting cut off on Seeking Alpha, saying that I have run out of my free articles. Typically, running out of free articles, I think, occurs in about the first day of a month. I'm interested in getting signed up, but when I've gone out and taken a look, I don't see. Has that disappeared, the 50% off?
No,
Oh, it's still
No.
out there?
it's still, it's in the description. You page down, I have a thing called tools, and the link is there for the 50% description. What I find, Bob, and I've not addressed this with them, is periodically that'll happen to me. And I have to, it says you are, you don't have that available. I have to log back in. I have to
Oh,
go up to it where it says sign in, and I have to log back in, and then it goes back and gives me what I'm in. So it may be just a glitch in their system. That
I
happens.
do belong to another, I say subscribe to another outfit that's High Dividend Opportunities. And this gentleman that runs this uses Seeking Alpha for publishing all his articles.
Oh.
And so when I get an email from this guy and I bring out, he'll send out maybe 3 or 4 articles a week, and they're all on Seeking Alpha. And when I go ahead and I hit going over to the link, there's never a problem. Somehow
Okay.
Seeking Alpha recognizes that I'm a client of HDO.
Okay,
Yeah, but when it comes to any other articles that are non-HDO, they basically won't let me in.
so now I didn't understand. Have you used the 50% discount?
No,
Okay.
the
No,
only
then
way
that
I
makes
get into
sense.
Seeking Alpha is through this other party.
Yeah,
I
okay.
subscribe to, High Dividend Opportunities, HDO. That's
Yeah.
the abbreviation. And somehow the system recognizes that I belong to that. It will let
Right.
me read the articles in Seeking Alpha, but issued by the author of HDO.
Right.
But anybody else, it will not. There's a lot of times there'll be things that'll come on up. And I agree with you, Carrie. It's extremely important having access to those type of articles. And the other thing I have to admit is the charting. I'm sorry, I can't remember the name of the charting company you use.
Trading View.
Trading Views. And I think that's very interesting too. I think that's very valuable for any investor to
I do
be
too.
able to have access to those because they're right up to date, right up to the minute. So that's
And-
all I got to say. Thank you, Carrie.
What I find is these tools that I call them have depth that you have to dig. I mean, they offer more than the normal individual can consume. A new one that I have just gotten involved in, yeah, you've seen on other YouTube channels, people talking about Webull and Robinhood. Well, I've been approached by Moomoo and Moomoo, and I now have a trading app on my phone that makes my Schwab account and my E-Trade account look sick. The amount of data, the amount of information they give me on my phone is just far beyond. And they've given me 5 free stocks. One of them was Apple. One of them was AMC Theaters, which I wasn't in. Another one was DraftKings, and I think the other one was Plug. So and I'll share more information on videos on it, and there is a link in the description where it's like Webull or whatever. They do give you free stocks, and as I say, I can trade on my phone, which I can't do with E-Trade. If they have an app, I don't know about it. I got a call from E-Trade because I have a sizable account there, and they asked me, what can I do for you? And I said, you can advertise on my channel. And they said, we're not interested in that. And I said, well, Webull and Moomoo and Robinhood are. And they said, we're not interested in millennials. I said, what? You're not? No, we're not in. We're only interested in baby boomers who will do option trading and trade on margin. That's where we make our money. We can't make money on millennials. And I said, do you realize that us baby boomers are dying and that those are your future customers? She said, I just got to tell you, Morgan Stanley, who owns E-Trade now, is not interested in them. That's very enlightening.
Hey, Kerry, there is one thing. When you first came out and you mentioned what you'd seen on Moomoo, and I obviously, it does strike an interest. I would like to take a look at it. I like trading on my cell phone. I like the convenience of it, being wherever I'm at.
Yeah.
But the question that comes to my mind, and you brought this up, you acknowledged this fact, that this is owned by the Chinese.
Yes, it is.
So given what your feelings are, and I understand, I totally respect your feelings on the Chinese. But if you were to put 500,000 into that trading account of Moomoo, would you feel comfortable?
That won't happen.
If you put $5,000 into Moomoo, would you feel comfortable?
Yeah.
You'd
Yeah.
feel, well, then I should say, what is the max that you would feel comfortable with putting into Moomoo?
Okay, here's why right now it's on my phone. Let's see if it'll focus. That gives me a active trade on everything on my watch list. I can open it up at 7 o'clock in the morning and it tells me what that stock did yesterday and what it's doing after hours. I can tap on the stock and I can get all the graphs and all the charts, and I can look at the 200-day averages. I can get anything and everything that I get on E-Trade and more right here. I don't get that from E-Trade. Now, will this ever be my major trading account? No. It will be a support vehicle for me. It'll be for when I'm at the beach and I don't have my desktop and I want to know what's happening right now on a market, and I can pick my phone up and it's right there. And as I say, I invested $2,000 and the deal is they'll give me 10 free stocks. I'm already up on the stocks that they gave me because we're in this bull market or bear market rally. But I just, and then the attitude of these people is just so different. This the lady that contacted me said, well, do you want to do some giveaways? I said, what kind of giveaways are you talking about? And she said, what do you want? And I said, I don't know. Let me think about it. E-Trade, Charles Schwab, none of them will do anything like that. These people want your business. It's like, who was it said? Bob in Ireland said, these Chinese people are smart. They're aggressive. They drive Maseratis because they are aggressive. They go after the business. They will bury JP Morgan because, as the lady said, we're not interested in the millennials, and they'll bury them.
Yeah.
Now, why am I comfortable? I've researched. They are a Delaware company. They are incorporated in Delaware. They have to abide by the rules of the SEC. They have to hold my money in the United States. They have an office in Palo Alto, California. It may just be a closet. I don't know. But I'll never put more than probably $10,000 into it. But I appreciate the quality of what they're giving me. Now, might they win me over and I'll put more? I don't know. I doubt it. I'm too old. I won't change that much. But that, as I say, they provide me a service that my current two brokers can't or don't want to. So.
Well, I guess the only other question I have is, because it is a Chinese company, and I understand that you're doing the trading in the United States, but what's to prevent the data, as you mentioned, data, going to the Chinese government so they know more about you, Kerry?
I don't give a shit.
All right, that's all I want to know.
All righty, we've got Nick. If you want to go ahead,
They
Nick.
may offer me a giveaway too.
I'm back. And just really three quick questions. And I'm glad Kevin muted me because I was getting into too much negative. But just a quick question to you, Kerry. Did you feel when you read this book, The End of the World, are you feeling optimistic, or do you feel a little bit pessimistic about the next 3 to 5 years?
That's a very good question. I again, in my mind, I say, if I understand the change that is going to happen, I can get in front of it and take advantage of it. Okay. So to answer your question directly, I feel very good about it. I feel that the United States will, as you mentioned, adapt 3D printing, and my desktop metals will turn into where it might be worth something. I believe what has to happen will be good. I just think of all the intellectual property that we lost. I just think about how China jump-started its EV program by inviting Elon Musk over and giving him the land to put a factory on. They're extremely good at what they do, and that is take advantage of us. I'm going to need to get this phone call. I have another internet technician coming to my house, and I feel that might be him. So carry on if you would.
All right, go ahead, Nick. You want to continue?
Ask a question to Gabe and yeah, there's a question I think this is a question I think Gabe and
Nick, you're cutting back out again. Are you moving around?
I guess I don't see Mark out there, but see Mark from the investment committee, right?
I think you just tried to.
Is Mark there?
I don't see Mark.
Hello?
Are you there, Nick?
No.
Same time. Okay.
Okay.
Kevin, can you mute Carrie? Can you mute Carrie? 'Cause
Okay.
he's on the phone. And Nick, I didn't hear anything you said.
Okay. Hey, Gabe, can you hear me now?
Yeah, I can hear you now.
Oh, Gabe, does your opinion about the next 6 months in the stock market, has it changed because you had a very bullish, a bullish feeling about the next 6 months before we hit around December or January? Has that changed in any way?
I wouldn't say 6 months. I never said 6 months exactly. What I did say is that I'm very bullish, and I believe very strongly that we will go over above April 1st numbers, April 1st value on the SPY, which was, or not the SPY, on the S&P 500, which was 45.45. That means 4,545. And no, my opinion hasn't changed, and so much so that I am in margin, Nick. So no, my opinion has not changed at all.
So this 1 week bull rally here, you expect it to, get some momentum as we get the next several months?
Yeah, basically, yeah, but Nick, it's not that straightforward. It's also very possible that we do what's called another, like a steeper bear trap, which means the market like goes down a little bit, and it pulls in people who are like, yes, it's going down, I knew it, and I'm gonna buy puts, or I'm gonna short, or whatever. And then the rally accelerates. But make no bones about it, I believe we are going to rally significantly in the coming weeks and months. I don't know how long it's going to be. Nothing is, it's technical analysis, not exact science. It can go to the side a little bit. It can play with our heads. But what I will say, that you can like quote me on, is that we will get above April 1st levels on the S&P. And when that starts to happen, because of history and because of how I do my technical analysis, that at that point is when I'm going to start taking profits, de-risking, getting off of margin, et cetera, et cetera. And then I will be completely cash. I will not time the top perfectly, because I never do, and I don't ever claim to do that. But I will be completely cash before what I think is going to happen, which is a inevitable crash from much higher levels than we are today, and a recession. And remember, a recession is defined by 2 quarters of declining GDP.
Yeah, and then finally, last question to you, Gabe, is options a good idea? Based on that premise, would options be a good idea for this period of time, as opposed to just investing in individual stocks?
Gabe, you're on mute.
Am I on mute?
No, I muted myself. Sorry. Okay, so again, like, options can be used to represent 100 shares of something, or
I think we just lost Gabe.
This is technology at its finest.
Yeah, we did lose Gabe. Benny, are you available? I see, Benny, you got your hand raised up. You got to unmute yourself. There you go. And
Okay.
Carrie, you need to unmute yourself.
Kerry said he thought he had a way for us to get this audio book from Peter Zion free. How do we do that?
There will be a link in tomorrow's video.
Okay.
Okay.
Perfect. Thank you, Benny. All right, we've got Gabe coming back in.
Sorry about that. I got a phone call and I hit the wrong button. Okay, so like I was saying, Nick, options can be used simply to be bullish, right? You can be bullish by buying a call, and all that means is you represent 100 shares of something, right? Or options, as you like to put it, can be used in order to say, hey, I am willing to buy this stock if it gets down to this price. And that's what's called writing a put. I went over it in my course or class, or whatever you want to call it. So when you say, would you recommend options? My short answer is yes, Nick, but how you use the options is the question. Like, if you want to make an extremely leveraged play, meaning you're buying more calls than the money that you have or that you are able to exercise is one thing, or if you're just buying calls for, and because you have the cash to exercise that many shares or whatever. So yes, I would, but the way to use options is multifaceted. Hopefully that answered your question.
All righty, we are current with questions and comments. Did you have
Nick,
anything
did
you
that
want-
answer your question?
Nick is not on right now. I'm gonna have to send him an email and let him know that he needs to watch the video afterwards after we get it edited.
Oh, he left after I accidentally hung up?
Yeah, he did. He saw you leave and he said, okay, I'm out of here.
Gabe, he's at a resort in Nantucket, and so he was dropping in and out. He's got bad connection.
Oh, okay. Cool.
All
Got
right. Bob, did you have anything from Ireland? Did you have anything, Bob, you wanted to say?
Yeah, it's just Gabe's piece on the calls and puts was fantastic. It was great. Just one of those times that it's great to be here with you guys, learning about stuff that I didn't know anything about. If there's anything I can teach you guys about carpentry, I'd love to assist. So, no, it's been really great. No, Gabe's testimonial the other night was really good. I'm going to listen. I'm not fully through it. I'm going to listen to it again. It's great. Now, Kerry, you put all this together. You got Gabe here. You got us here. You got Kevin here. All the people. It's just fantastic, Kerry. I'm not investing right now. I'm not spending money on stocks right now. I haven't been for months. And I'm not going to be for another while.
Okay.
In stocks. I'm putting money into my house here. But I'm still listening to this. I'm still listening to the conversation. And it's great. Like the platinum platform, Gabe coming in, people like Kevin, it's great. Kerry, what you've done here is fantastic. That's what I want to say tonight.
Well, it fills a need for me, Bob. Trust me. This is great. I love it.
It fills a want for me, Kerry. I'll tell you. No, and it's great now hearing the other people's opinions. Your enigma probably captured me, but the other people, Gabe, along the way, Drew, all the other people, it's great. It's absolutely fantastic, Kerry, and long may you continue.
Thank you. I want to say something to Bob in New York about, we were talking about this Moo and how technology can really help you. Gabe made a statement there that the S&P would get back to its highs of April 1st, and that would be its peak. So I went to Moo and I pulled up Google, and it gives me a chart. Okay. I'm able to drag a line up to April 1st, and I can see that Google's price on April 1st was $2,863. That's on my phone. I had a question. I could not do that at E-Trade. I could not do it at Schwab. This technology is so far beyond. And again, risk and reward. I won't put more than $5,000. That's how I'll rent this from them.
All righty.
Just look at it and see if it isn't right for you.
All righty. We've got a raised hand here from Benny. If you want to go ahead, Benny.
Yeah, my question is for Gabe. Gabe, assuming that your thoughts are correct about April of next year.
Wait. I didn't say anything about April of next year, sir.
No.
Oh, excuse me, April of this year, excuse me. That the
Yeah,
market
so-
would get back to that level.
Yeah.
Um,
Okay.
So assuming that comes close to being true, how far after that down do you think the market will go?
I'm pretty, I'll say it, I'm going to gloat a little bit. I am extremely good at technical analysis because I use many indicators to come to my conclusion, right? But one thing I am not is Nostradamus. I am not that, and I can't tell you how far it's going to go, if it's going to go lower. And anyone who claims that they can do that, you know, it also has a bridge to sell you somewhere. The reason I can say one of the reasons that I can say for certain that, or at least in my mind, as close to certain as you can get, why we're going to get to the S&P will get to April 1st levels is because that is the day that the 10-year and the 2-year bond inverted. It's called the yield curve inversion, right? That's the day. And every single time that has ever happened before, which by the way, predicted the upcoming recession 22 months or less ever since it did that. Every time it did that, it would go down, it would rally up, and then the inevitable crash / recession would happen. So, as far as that level and that metric, that's why I'm comfortable saying that, because until history proves it wrong, the 10-year and the 2-year is batting 1,000. It's 100% on what it on a couple things that it does, and that's one of them. Now, as for how low we're gonna go once we do get into a recession, I don't know. I can't give you an answer there. I don't know. What I do know, because it makes no sense, right, is that we're going to go into a further crash / recession from these levels, because we are already in extremely oversold levels. Like, and I'm not just talking one or two stocks, I'm talking the indexes. It doesn't matter if it's the Dow or the NASDAQ 100 or the S&P 500. They're all on oversold levels, right? So when you have the market on oversold levels, when you have the fear and greed index on extreme fear, when you have capitulation, which is capitulation, it just, if you guys don't understand what that is, it's when one indicator is going up and the other indicator is going down, or vice versa. So in this case, we have capitulation on many indicators where you have the market going down, or at least it was, right? But then you have all the other indicators going up. So you have all kinds of things like volume. You have there's like 4 of them. I don't have them in front of me to name them to you, but there's lots of things that is saying, okay, for right now, at very least, we have a bottom, or a temporary bottom, right? And I've been calling it out for 2 weeks. And long story short, because I don't want to talk forever, we're going to go up. I believe we're going to go past April 1st levels. That's just something that I believe is going to happen. I put my money where my mouth is. I'm betting big bullishly. But again, I want to end it with this. Make no bones about it. Long term, I am bearish. We will get into a recession. It will come. It will hit America and the world hard. And when that happens, that's when people are going to start losing jobs. That's when growth is truly going to be stunted, etc., etc., etc. So everything I'm saying is simply for the short term. If you're not a trader, which most people aren't, then if you don't know how to mitigate risk, if you don't know how to not be greedy and sell at a certain time or whatnot, then I don't recommend getting into the market. But I like to share what I know with the group. Whether you're able to utilize it or not is on you. So I do want to make the statement that for the next year and some change overall will not be a good. I think 2023 is going to be a horrendous year. So there's that.
That was my last question. How long do you think it'll last? So you say at least a year.
No, I don't even know that answer. I just think that all in all, 2023 is going to be a bad year. I think recessions on average last, I want to say 9 months, or it's either 9 to 15 months. I don't remember. I'm literally just spitballing here. I'm racking my brain. But overall, the market will go up. You know, if the market doesn't go up overall, we have bigger problems, right? But you're thinking, you're catastrophizing at that point, and you're thinking about hyperinflation and maybe even what's it called, the something with a D, I forgot what it's called. Anyway, you know, if you're thinking like these are the last days of America as we know it, and then people are going to have to start trading gold or commodities on the street in order to get things, you know, that then you're catastrophizing. You know, that's not going to happen. This recession is going to happen. It's going to come and it's going to go. And in 5 years, we're going to have new all-time highs, because that's how the wheel turns, you know, and that's what I believe. So there's that.
All righty.
Yeah, this is Carrie.
Do we, I think we are current with all questions and comments.
Sorry.
We don't have anybody else, and I think Carrie is on another line.
All right,
So I think we will end this call right now.
good enough.
Alrighty, guys?
All
Talk
right,
to you
Kevin.
later.
See you later,
See you.
everybody.
Bye.
Bye.